how would you describe your investment philosophy and portfolio strategy for UTI Flexi Cap Fund?
So Sonal, UTI Flexi Cap is basically built around these three key pillars that you see in front of you on the slide. We start with quality. That's always the starting point. And for us, quality signifies the ability of a business to generate strong return on capital and to create economic value. So in a way, the philosophy is built around how the business would create and deliver value in the coming years. Is the business strong enough to generate strong cash flows and therefore have a strong balance sheet? And is it meeting the very fundamental principle of creating return on capital employed substantially higher than the cost of that capital? So it's basically a strategy which is oriented towards the potential of the business rather than looking at which sectors or which stocks can do well in the coming quarters. Now, with quality actually being solved for at the first stage itself, we then try to solve for businesses that can continue to grow better than India's nominal GDP growth or better than India's earnings growth potential, as showcased by the broader indices like Nifty 500 or Nifty 100 and so on. So we don't stop at quality. We want to solve for growth as well. And here we try to look for businesses that are part of an industry which is at a very, very sunrise stage today, at a stage where the penetration of that industry is very, very low. And therefore, the potential for a multi-decade kind of growth is very high. Now, therefore, in the final submission, what we try to look for are businesses that are displaying both of these characteristics, which is basically quality along with growth. Look for any stock selection and portfolio construction, valuation has to be one of the key factors. It's just that for us, the conversation never starts with valuation. We don't look for things which are cheap or which are mispriced or which have seen a dislocation in terms of the value price equation. For us, the starting point is always understanding the potential of businesses and whether these businesses themselves can create economic value or not. But certainly, valuation is the third most important step in our philosophy. We try to solve for businesses that look attractive from a price to cash flow perspective. We also look for the right valuation of a business by discounting their future cash flows to the present. So since we deal with high growth businesses, many a times these growth businesses look expensive from a 1 year, 2 year forward perspective. So to do justice to them, we have to look at their growth potential over the next 20 years and then discount back their earnings and their cash flows to the present day. So yeah, that's a condensed version of our philosophy for you. But there are a few other facets, which are important in our stock selection and portfolio construction. We are bottom-up driven, so we don't look at what's happening in the economy to construct our portfolio. We look at things from a bottom-up perspective. So, like I just mentioned, we would always try and get excited by the potential of businesses well into the future, by which I don't mean the next 1 or 2 years, but by which I mean the next 5 to 10 years. And we try to understand the microeconomics of these businesses. How are they placed in terms of the competitive intensity within their respective industries? Is it a duopoly? Is it an oligopoly? Or is it, let's say, a perfect competition, which means that the ability to generate high ROCs would be very limited? So that's what we try to look for in our businesses. We have a very low portfolio turnover ratio. We have a slide on that subsequently, so I'll discuss this a bit later. But one of the key things which I do want to mention at this stage is that although the portfolio has a very low portfolio turnover, but it has a very high active share. So what we like can be significantly overweight versus the benchmark. What we don't like can be absolutely zero. And that's true of multiple sectors where we are having zero holdings because we don't think that we can find companies which display the kind of economic attributes that we wish to have.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.